Imagine waking up to see $570 million in Ethereum suddenly dumped on the market. The blockchain that supposedly powers the future of finance, decentralized apps, NFTs, and even DAOs, is now facing a major test. As the rest of the crypto market heats up, why is Ethereum, the so-called king of altcoins, suddenly stuck in the mud? And more importantly, is this the start of a much larger shakeup that could rewrite Ethereum's place in the world of finance and technology? Let's be real. Crypto markets are always unpredictable, but this time, something feels different. Ethereum isn't just another coin, it's the backbone of decentralized finance and the home of explosive tech innovation. Yet recent data paints a dramatic picture. Over 225,000 ETH, worth more than $500 million, sold in just 48 hours. Investors are scrambling for profits, technical indicators are flashing red, and even seasoned traders are whispering about the risk of an imminent correction. So what's going on behind the scenes, and what does this mean for the future of Ethereum, your portfolio, and even the way money moves around the world? To answer these questions, let's rewind a bit and understand what makes Ethereum unique, and why every blip in its price sends shockwaves far beyond just the crypto crowd. Ethereum was born out of frustration. Back in 2013, a 19-year-old programmer named Vitalik Buterin envisioned a blockchain that went far beyond Bitcoin's simple transfers. He wanted a decentralized world computer, a platform where anyone, anywhere, could build unstoppable apps, earning, spending, and even governing without middlemen. That dream became reality in 2015 when Ethereum's mainnet launched, making the first smart contracts and decentralized applications possible. Since then, Ethereum has been on a wild ride. It didn't just give rise to DeFi and NFTs. It completely changed how people interact with digital assets. Remember the London hard fork in 2021? Ethereum introduced EIP 1559, burning a portion of each transaction fee and reducing inflation, making ETH potentially scarcer over time. The merge in 2022 was another game changer. Ethereum shifted from proof of work, which guzzles electricity, to proof of stake, slashing its carbon footprint and setting new standards for blockchain sustainability. According to Linda Xie from Scalar Capital, the Dencun upgrade is a game changer for Ethereum, significantly improving scalability and reducing transaction costs. That's not just hype. The Dencun upgrade, rolled out earlier this year, slashed transaction fees on Layer 2 networks by 50%. Suddenly, Ethereum became cheaper and faster, strengthening its case as the go-to platform for developers and users alike. Let's look at some hard numbers. In Q2 of 2025, the total value locked in Ethereum's DeFi protocols soared to $45 billion. That's a sign of immense trust. Billions of dollars flowing through lending, borrowing, and trading platforms built on Ethereum's rails. Developer activity is booming too. Smart contract deployments jumped 30% last year. And user adoption? The number of active addresses shot up 25% in just the last quarter. Even the Ethereum name service, making human-friendly blockchain addresses, saw registrations spike 40% over the past month. Ethereum isn't just a coin, it's a sprawling ecosystem, home to everything from decentralized exchanges like Uniswap to NFT marketplaces like OpenSea. And its governance is famously transparent, letting anyone propose and vote on upgrades through Ethereum Improvement Proposals, or EIPs. This vibrant open-source culture has kept Ethereum at the bleeding edge of blockchain innovation, despite the fierce competition from so-called Ethereum killers. But even as the technology leaps forward, the market tells a different story. Ethereum's price is hovering stubbornly just above $20,500, stuck while Bitcoin and other assets make dramatic moves. Technical analysis reveals a worrying trend, a bearish crossover on the moving average convergence divergence, MACD, after nearly 2 months of bullish momentum. In plain English, the rally might be over, and increased volatility could be on the horizon. Katie Stockton of Fairlead Strategies sums up the mood. Ethereum is exhibiting short-term weakness but remains in a long-term uptrend, with key support at $20,400. But what happens if that support breaks? Without new buying interest, that critical $20,500 floor could give way, sending Ethereum tumbling toward the next support level at $2,240. If sellers take control, the repercussions could echo across the entire crypto market. Here's where things get truly fascinating. On-chain data shows the ETH supply on exchanges has plunged to a multi-year low. Just 12% of all ETH is now held on exchanges. According to on-chain analyst Willy Woo, ETH supply on exchanges is drying up, indicating strong hodling behavior and potential for a supply squeeze. Normally, this is a bullish sign. Fewer coins on exchanges means less immediate selling pressure. Yet, despite all this, enormous amounts of ETH are being sold into the market. Are the big players just taking profits, or do they sense something bigger lurking around the corner? Meanwhile, Ethereum's transaction fees spiked to a 90-day high of $1.33 in late May, hinting at renewed network congestion and block space demand. But thanks to recent upgrades, Layer 2 solutions are picking up the slack, keeping costs manageable and onboarding new users. The Dencun upgrade is credited with making Ethereum's ecosystem more accessible, but will this technological leap be enough to counteract short-term bearish sentiment? Let's not forget the global picture. Institutional adoption of Ethereum is quietly accelerating. Raoul Pal, macro investor and Real Vision founder, predicts Ethereum is likely to outperform Bitcoin in the coming months due to its strong ecosystem and growing DeFi adoption. Major banks and tech giants are experimenting with Ethereum-based systems, while regulators in the US and Europe inch closer to providing clearer frameworks for crypto assets. A regulatory green light could trigger a flood of institutional capital, but only if Ethereum's house is in order. The stakes couldn't be higher. Ethereum's future hinges on three fronts: technological innovation, market psychology, and regulatory clarity. Its transition to proof-of-stake didn't just attract environmentalists, it also sidelined miners, reducing the hash rate by 15% and changing the incentives for securing the network. Meanwhile, staking rewards sit at 3.5%, tempting more long-term holders to lock up their ETH and earn passive income. But in the background, a new set of challenges is brewing. Can Ethereum maintain its lead in the face of fast-moving rivals and ever-changing regulations? Will the surging popularity of Layer 3 solutions and DAO governance models inject new life into the platform, or sow confusion and fragmentation? And how will the ecosystem handle the paradox of high user adoption but growing short-term price uncertainty? As the price consolidates above $2,500, some analysts see opportunity. Michael Van de Poppy, a well-known crypto trader, points out, Ethereum is consolidating above the $2,500 level and could target $3,000 if it breaks through resistance. But that's a big if. The key resistance sits at 2,654s, a level Ethereum must breach to ignite a new rally. Without that breakthrough, traders may lose patience, and the sell-off could accelerate. Yet beneath the surface, the story isn't just about charts and numbers. It's about psychology, a tug-of-war between fear and greed. After 2 years of relentless innovation, why is confidence suddenly faltering? Are we witnessing a healthy correction, or the first signs of a deeper crisis? As Ethereum's price teeters on the edge, investors face a classic dilemma: hold tight for the next innovation wave, or bail out before the next leg down. Is the recent $570 million dump just profit-taking, or the canary in the coal mine? In the next act, we'll explore the forces that could tip the balance decisively. Is Ethereum's long-term case as strong as bullish analysts claim, or are the cracks starting to show beneath the surface of the world's most ambitious blockchain? Because as the future of digital finance hangs in the balance, one thing is clear: the next move for Ethereum could change everything. As we dive into what lies ahead for Ethereum, it's impossible not to feel a mix of anticipation and uncertainty. The $570 million sell-off may have rattled nerves, but Ethereum's heartbeat remains strong beneath the surface. The stage is set for a rare kind of drama in the digital asset world, where technological innovation, market psychology, and powerful regulatory forces are on a collision course. What happens next could redefine not just Ethereum's fate, but the entire landscape of crypto. Let's unpack these looming forces, starting with the technological frontier. The Dencun upgrade delivered meaningful improvements. Transaction fees on Layer 2 networks are down around 50%, and the surge in developer activity is hard to ignore. According to Glassnode, active Ethereum addresses are up 25% this quarter, and smart contract deployments have soared by 30% in the last year. Enthusiasm in the builder community is palpable, and yet congestion remains an issue, with average mainnet fees spiking to their highest level in months. The Dencun upgrade is a game-changer for Ethereum, significantly improving scalability and reducing transaction costs, as Linda Z of Scalar Capital puts it. But perhaps the real game-changer is what lies just over the horizon. Layer 3 scaling solutions are quietly materializing. Starknet, ZK Sync, and other roll-up technologies promise a future with near-instant, ultra-cheap transactions, not just on paper, but in practice. Layer 3 scaling solutions will further enhance Ethereum's capabilities, enabling more complex and privacy-preserving applications, Vitalik Buterin himself explained recently. Imagine a world where DeFi, NFTs, and next-gen social platforms can operate at global scale while safeguarding user privacy. That's the vision. Now the challenge is execution and adoption. But technology alone doesn't guarantee success. The second force at play is the market's collective psychology. The recent sell-off, as alarming as it seemed, also tells a deeper story. While over 225,000 ETH changed hands in 48 hours, the share of ETH held on exchanges has actually fallen to multi-year lows, just 12%. Willy Woo, a leading on-chain analyst, describes this as strong hodling behavior and potential for a supply squeeze. In other words, many investors are locking down their ETH, waiting for a clearer direction. For traders, these volatile periods create both risk and opportunity. As Katie Stockton from Fairlead Strategies notes, Ethereum is exhibiting short-term weakness, but remains in a long-term uptrend with key support at $20,400. The technical setup is at a crossroads. MACD indicators show that the bullish momentum has cooled, and the price is hovering around that all-important $20,500 support. If ETH fails to defend this level, the next stop could be $2,244. But if buyers regain the upper hand and punch through $2,654 resistance, ETH could quickly target $2,814 and potentially even $3,000, according to analyst Michael van de Poppe. Ethereum is consolidating above the $20,500 level and could target $3,000 if it breaks through resistance, he tweeted recently. This is the very definition of a make-or-break moment. The third, and perhaps most unpredictable force, is regulation. Ethereum's future is no longer determined solely by code and community. Governments and regulators worldwide are waking up to crypto's impact, and their next moves could shape the industry for years to come. Regulatory clarity is a double-edged sword. It can bring legitimacy and unlock institutional capital, or it can stifle innovation with overly restrictive rules. If the US or Europe delivers clear, supportive frameworks, Ethereum could see record inflows from banks, pension funds, and asset managers looking for real yield and programmable finance. On the other hand, punitive tax regimes or aggressive restrictions could send developers and users fleeing to friendlier jurisdictions, or even to rival chains. Let's not forget the human element behind the code. Decentralized autonomous organizations, or DAOs, are taking a bigger role in Ethereum's governance. Instead of a handful of developers making key decisions, thousands of token holders can now propose and vote on critical upgrades. This opens the door to more organic, bottom-up innovation. But it also introduces new questions about coordination, voter turnout, and the risk of governance gridlock. If DAOs can deliver on their promise, Ethereum will become more resilient, adaptable, and truly community-driven. So what's next? We see three main scenarios unfolding in the months and years ahead. In the first scenario, call it the scaling renaissance, Layer 2 and Layer 3 technologies take off. Transaction costs plummet, new waves of complex applications arrive, and Ethereum cements its position as the go-to smart contract platform. TVL and DeFi surges past new records, institutions finally wade in, and ETH outpaces even Bitcoin's returns. In this world, the recent sell-off is just a hiccup before another explosive bull run. Raoul Pal recently remarked, Ethereum is likely to outperform Bitcoin in the coming months due to its strong ecosystem and growing DeFi adoption. The second scenario is regulatory crossroads. Here, progress is uneven. Some jurisdictions embrace Ethereum and DeFi, while others clamp down. Developers must become diplomatic as well as technical, navigating a patchwork of laws to keep their dApps alive. Institutional money arrives, but cautiously and only where there's legal certainty. Ethereum's price growth is steady but less frenzied, and alternative chains jockey for market share in regions hostile to Ethereum. The third scenario, network fatigue, is the darkest. If Dencun and future upgrades aren't enough to alleviate congestion and keep fees low, or if DAOs descend into infighting, Ethereum could see users and developers drift away. Competing blockchains, faster, cheaper, more pliable, snap up the next generation of apps. Market confidence wanes, and the price languishes below resistance for months. Ethereum loses its status as the undisputed leader, facing its toughest existential test since its launch in 2015. Which future will it be? Odds are, reality will mix elements from all three. Ethereum's greatest strength has always been its relentless, almost stubborn, capacity for adaptation. The project that started as a simple idea in Vitalik Buterin's mind now anchors a $45 billion DeFi ecosystem, a thriving NFT scene, and an ever-growing developer base. It has weathered hacks, hard forks, scams, and regulatory storms before, and come out stronger each time. So, what does all this mean for you, the individual investor, developer, or even the curious observer? First, don't get swept up in short-term panic or euphoria. Periods of consolidation, like the one we're seeing now, often serve as the foundation for the next big move. Watch the $2,500 support and $2,654 resistance like a hawk. A break in either direction will give the clearest signal about where ETH is heading next. Second, educate yourself about Ethereum's technological roadmap. Upgrades like Dencun and the coming Layer 3 solutions aren't just jargon, they're the engine of future growth. Learning about how rollups, sharding, and DAOs work will give you an edge over the average participant in this rapidly evolving ecosystem. Third, understand that regulation isn't just background noise. Follow developments in key jurisdictions, especially the US and Europe. If you see moves toward clarity and acceptance, that's a green flag for the entire crypto sector. Heightened regulatory risk, though, is a warning to exercise caution, diversify, and never invest more than you can afford to lose. Fourth, consider your own participation in governance. Owning ETH can be more than just an investment. It's a vote, a chance to shape the future of the network through proposals and DAOs. If you're a developer, builder, or simply passionate about decentralization, your voice matters now more than ever. For those staking their ETH, keep an eye on the annual percentage rate. At 3.5% APR, staking still offers attractive passive income, especially in volatile times. But always understand the risks. Lockup periods, slashing, and evolving network rules can all impact returns. And here's a little-known secret. Ethereum's decoupling from Bitcoin is more than just a statistic. The correlation between ETH and BTC has dropped by 0.2, a subtle but powerful sign that Ethereum is becoming its own market force. For savvy traders and portfolio designers, this decoupling opens the door to new diversification strategies, ones that could outperform classic Bitcoin-heavy crypto portfolios in the next market cycle. In closing, the question at the heart of this video, will Ethereum overcome this resistance and reignite a bull run, or is it facing deeper issues that threaten its leadership? Demands both realism and optimism. The short-term technicals are indeed bearish, and the recent sell-off exposed nerves beneath the surface. But the fundamentals, surging developer activity, rising network usage, transformative upgrades, and a committed, innovative community, all argue that Ethereum is far from finished. If the network can successfully absorb the influx of new users, keep pace with innovation, and navigate the regulatory maze, there's every reason to believe that Ethereum will not only survive this challenge, but emerge more dominant than ever. In the weeks ahead, all eyes will be on whether ETH can crack that $2,654 resistance. A decisive break could bring back the bulls in force. But even if volatility persists, keep in mind, markets are driven by cycles, not straight lines, and opportunities abound for those who stay informed and resilient. So whether you're holding ETH, trading it, or just watching from the sidelines, remember this: Ethereum's story is still being written, line by line, upgrade by upgrade, community vote by community vote. The next chapter could be its most dramatic and most rewarding yet. If you found this analysis valuable, hit the like button and subscribe for more deep dives into the crypto world. Drop a comment below with your predictions for Ethereum's next move. Will it soar or stumble? And here's a final secret you might not know. The next big Ethereum upgrade, rumored to introduce native privacy features, is already being tested behind the scenes. Stay tuned for a full break.